Good morning. Welcome to Morning Call. I'm Latha Venkatesh. With me are Sonia, Shenoy and Anuj Singhal. Like yesterday, there is a little bit of red on the Asian screen and the Wall Street overnight calls as well. But we may yet do our own thing. Good morning, both of you.
Hi Latha, good morning. Hi Anuj, morning. Yesterday was a good day for the market. I mean, we had a surge and, it was an across-the-board move that we saw. There was also buying by FIIs to the tune of 450 crores, although that was not matched up by any domestic buying. So that would be a bit of a concern. But how are the cues stacked up for today?
Well, I'm not surprised with the trickle of FII buying because the global algorithm is actually now favoring India. The incremental fall in crude and the amount of data you get from countries like Latin America and some countries like Malaysia is that those dependent on commodities are really having a bad day. So there is an incremental advantage to countries like India. And I would reiterate that gold is a huge positive for the domestic funds. I mean, the DIIs have been pouring money or at least pushing in money when the FIs were not buying. Now it's actually going to become a flood. Last month I heard from mutual fund guys that about 10,000 crores was received by the mutual fund community. As gold goes below 25,000, that's psychologically very big for the Indian investor. I mean, people will wait to buy now. Until now, oh, it's cheap, let's go and buy. But now it will be, oh, it's getting cheaper, let's wait. The flood of money that will come, that would have gone to gold is incrementally likely to find its way into Indian stocks. So liquidity, whether it is the global arithmetic or whether it is a domestic financial assets arithmetic, is favoring Indian equities and financial assets at this point in time. And then weather has also turned a little positive. We hear from the last 24-48 hours that almost all pockets in Maharashtra, which was a hugely deficient state, in rain has got some rain. It reduces the deficit, obviously does not take it to neutral. But that is an incremental positive, and my sense is that the legislative news that we are getting, in spite of 2 days of washout in two houses, is still being seen by India Inc. as incrementally positive, whether it's the land bill or the GST. So there is progress and not retrogression in both areas. Some creative solutions are being looked at. So my sense is there's a lot of positivity, but I am only worried about the way in which the markets rose yesterday. I mean, there was no incremental reason to push it so much. So my fear is, was it recklessness? And therefore, are we building up for a fall someday, today or some other day? Because we are probably getting a little unhedged in the way we are growing. Anuj?
Well, Latha, morning. Sonia, morning. I think yesterday's surge in particular was led by three stocks, Reliance and HDFC Twins. And Reliance will report numbers, of course, tomorrow, and the market is expecting good numbers again. And that's why you saw that big surge. Standard disclaimer, of course, Reliance owns TV18 and Network 18. But that really was the stock that went to 52-week highs and led the market higher. But I was looking at the delivery-based numbers, and there was no major delivery-based buying in any of these three stocks. Reliance had only 200 crores. HDFC was less than 100 crores. HDFC Bank was also not too much. My sense is that if I have to stick my neck out at the risk of being horribly wrong, today could be a down day. We're now going through a phase where the market is likely to go through volatility till expiry. Day before was, looked like there was a bit of panic. Yesterday looked like there was a bit of euphoria. And maybe I think the truth is somewhere in between. So it's now going through a phase where you might want to buy the dips and sell the rallies. You want to do both. You take a look at yesterday's numbers from FIs and DIs. There was buying of 450 crores in cash market, but DIs sold 350 crores. That's important. And FIs sold index futures, 300 crores. Not a large number, but why do you sell index futures ahead of expiry? Because you believe that, either it's going to be volatile or there are going to be a couple of down days as well. So that's why you saw this short build-up. And yesterday there was quite a bit of index option buying, 700 crores of index option build-up, and there was quite a bit of surge in put-call ratio. And I saw quite a bit of build-up at 8,500 and 8,600 puts when puts became cheap, 50 or 60% lower in prices. So my sense is, and I'm going only by data, and I'm saying that, at the risk of being horribly wrong, my sense is that this data is indicating that today could be a down day, and we are set to go through a bit of volatile phase. 8,600, I would still maintain the risk reward does not favor the bulls at 8,600, at least for the index. Individual mid caps may still continue to do well because, a lot of these stocks are bouncing back from reasonable lows. A lot of stocks are showing good earnings traction. A lot of companies are showing earnings traction. So individual stocks may continue to do their bit. But for the index, at 86.30, 86.40, I think the risk reward does not favor bulls.
Do you think Reliance could be a big trigger to take it to the upside? Because it was yesterday, and if the numbers are better than street expectations...
I just wanted to add a little bit to that question. It was also on my mind. There was an instance of the tail wagging the dog. When I asked people what's happening in Reliance, I mean 4.25%. People are talking about things like Supreme Petrochem is up 20% because they announced robust earnings. The entire Petrochem complex, even Manali Petrochem, anything with that word in their in the name appeared to be doing well. So there was that element of recklessness in the kind of reasons I got.
Yes, but I tell you what, 4.25% on one day on Reliance looks big, but look at Reliance's chart for last 2 or 3 years. The stock has practically done nothing. Okay. And a lot of times it's flattered to deceive. Every time it rallies, people believe it's the false breakout. And the numbers have been good for last 2 quarters, and this quarter is expected to be another good quarter for Reliance. But then again, it's done this far too many times. Look at the 12-month chart; it's up 2%, and so many times it's trapped people at 1,040, 1,050. It's not even funny. So, honestly speaking, it could again be one of the flash in the pans. You don't know. And Reliance is hardly a stock that in which earnings really re-rate the stock. It's now the next trigger factors. What's happening with gas prices, what's happening with Jio, the launch of Jio. That's going to decide the future trend. For now, the market is looking for a trigger ahead of numbers. Reliance is that trigger, and that's why you're seeing this kind of rally. I would not want to read too much into the rally though.
All right. Well, one more internal that you should watch closely is what's happening with crude. There was a big slide that we saw in crude overnight. In fact, NYMEX is now below the $50 per barrel mark for the first time since April. And Brent crude as well, as you can see, has slipped to $56
now
per
the
barrel.
Technical view appears to be that it can once again revisit that $42 it did in March after that big recovery we saw. So there is more to go on the downside seems to be the opinion at this point in time.
Okay, so that's another positive for a